In the last 96 hours, something happened in the crypto market that I have not seen in over a decade. I want you to listen very closely to this number because it should shake you awake. During Bitcoin's sudden dip, a drop that had retail panicking and Twitter filled with fear, more than $5.4 billion in long positions were liquidated, the largest single flush since the 2021 capitulation. But here's the part nobody is talking about. While retail traders were getting wiped out, institutional wallets accumulated over 72,000 BTC. That is the largest net accumulation during a red week since Bitcoin was under $8,000. And when you see forced liquidations on one side, while deep-pocketed buyers step in aggressively on the other, that is not the sign of a dying asset. That is the sign of an asset entering the most explosive early phase of a parabolic cycle. And I'm going to say this as clearly as I can. This dip is not the end. This dip is the beginning of the strongest Bitcoin bull run we've ever seen. Yes, I'm telling you right now that Bitcoin reaching $250,000 is not only possible, it is becoming the base case scenario. Buy the dip now. Because the truth is simple. Price action lies, emotions lie, headlines lie. But flow of funds does not lie. And what we just witnessed is the exact same pattern that preceded every major Bitcoin explosion. A brutal liquidation event, followed by aggressive strategic accumulation, followed by a period of sideways confusion, followed by a violent breakout that leaves all the doubters behind. When you zoom out and look at the fundamentals, it becomes nearly impossible to stay bearish. Bitcoin is experiencing its tightest long-term supply squeeze in its entire history. The daily supply issuance is down nearly 60% compared to the last cycle. Long-term holders now control a record 71.5% of all supply, meaning that less liquid Bitcoin is available for trading than at any moment since its creation. Combine that with the ETF flows that are still net positive despite this correction, and you get a picture that is radically different from the doom and gloom narratives floating around social media. But let me tell you why this moment right now. This exact moment of fear, this exact moment of confusion, is when smart investors make the decisions that define the next 10 years of their financial future. Because history has shown us something very important. Bitcoin bull markets never begin in clarity. They begin in disbelief. Every time we enter a new expansion phase, the average person is convinced Bitcoin is finished. And yet, every single time, the people who felt the most discomfort buying during the fear were the ones who profited the most when the euphoria kicked in. I've said this 100 times. Fear is loud, but smart money is silent. And right now, silent money is backing up the truck. Let's talk about analytics because I want this to be crystal clear. During the recent drop, Bitcoin's funding rates flipped deeply negative across every major exchange. That is not bearish. That is the fuel that powers major short squeezes. Historically, when Bitcoin's funding turns heavily negative while long-term holders continue to accumulate, the average 60-day return from that point is plus 44%. Not sometimes, not occasionally, on average. And that's not even the crazy part. On-chain metrics show that more than 84% of all short-term holders who bought during the previous rally have now capitulated. That means most of the weak hands are gone. The people still holding now are the ones who hold through volatility, the ones who hold through fear, the ones who understand cycles. And when your holder base becomes this strong, it doesn't take much to push the market explosively upward. But here's something even bigger, something that almost no one on mainstream financial media is covering. The ETF flows during this dip did not collapse. In fact, during the largest down day, while Bitcoin dropped over 8%, US ETFs saw net inflows. That means long-term institutions, pension funds, wealth managers, endowments, were using the volatility to accumulate. You don't see that in 2017. You don't see that in 2021. That is something completely new to this cycle. And when institutions buy, they don't buy to flip. They buy with 5, 10, 20-year time horizons. They buy because Bitcoin is now a recognized macro asset, a digital equivalent of gold with exponential upside. And that brings me to the most important point. This cycle is not like the others. This is the first Bitcoin cycle occurring during a global AI boom, a productivity revolution, and a structural transformation of the financial system. Liquidity is rising, rates are expected to fall next year, tech spending is accelerating at one of the fastest paces in history, capital is searching desperately for asymmetric upside, and there is nothing that provides asymmetric upside like Bitcoin entering a parabolic phase with supply tightening, institutional demand soaring, and global adoption accelerating. Let's talk about the halving, because most people do not understand how powerful this cycle's halving actually is. Historically, each halving reduces Bitcoin's supply inflation by around 50%, but this halving occurred at a moment when long-term holders already had locked away nearly 3/4 of the circulating supply. That means the float, the actively traded Bitcoin, is at its lowest level ever. So the halving didn't just reduce new supply, it created an unprecedented supply shock where demand from ETFs, hedge funds, sovereign entities, and corporate treasuries has nowhere to go but higher. And when demand exceeds supply in this extreme of a manner, price does not move gradually. Price moves violently. Bitcoin does not creep upward, it explodes. Now combine that with miner capitulation. When miners capitulate after a halving, that has historically been the final cleansing event before massive parabolic upside. We saw miner capitulation in 2012. We saw it in 2016. We saw it in 2020. And right now, miner capitulation metrics are flashing again. Miners selling Bitcoin to cover costs creates short-term pressure. But once their selling stops, and it always stops, because miners eventually run out of BTC to sell, the market rebounds aggressively. Every single time miner capitulation has happened, Bitcoin has entered a major rally shortly after. It's the resetting of supply, the clearing of inefficiencies, the tightening of the overall market structure. Let's talk about liquidity cycles, because this is the part that most retail investors completely misunderstand. Bitcoin does not follow headlines. Bitcoin follows liquidity. And global liquidity is projected to rise sharply over the next 12 to 24 months. Central banks across the world, from the US to Europe to Asia, are preparing for rate cuts. Fiscal spending is rising. Sovereign debt pressures are forcing governments to adopt more accommodative policies. And when liquidity rises, assets with high upside convexity outperform everything else. Bitcoin isn't just one of those assets, it is the leading asset. During liquidity expansions, Bitcoin historically outperforms equities, commodities, real estate, and traditional currencies. Not sometimes, not in special cases, consistently. This is why I am saying with full confidence, despite the fear, despite the liquidation events, despite the volatility, the structural setup for Bitcoin right now is the strongest it has ever been in its history. A path to $250,000 is not only reasonable, it is increasingly likely. If Bitcoin simply follows the same percentage expansion from previous post-halving cycles, we get price targets between $180,000 and $320,000. But this cycle is stronger. More adoption, more demand, more institutional involvement, more liquidity, and a tighter supply squeeze than ever before. Let's address something else, the emotional component. Right now, people are scared. People are shaken. People think they missed the top or that Bitcoin is going to crash. The fear is real, I get it. But go back and look at 2016, before Bitcoin went from $400 to $20,000. Or look at 2020 when Bitcoin dropped from $12,000 to $9,800, right before exploding to $69,000. Fear is always part of the setup. Fear is always the final barrier before major upside. The market wants to shake you out. The market wants you to doubt your research. The market wants you to panic so that institutions can buy what you sell. But if you zoom out, every major dip has been a gift. and every major fear-driven sell-off has been followed by one of the strongest rallies in Bitcoin's history. And let me tell you exactly what this dip represents. It is opportunity. When retail is scared, when liquidations spike, when Twitter turns bearish, when the short-term narrative is negative, that is when long-term investors prepare for generational entries. I've seen this pattern across equities, across tech, across crypto, across every risk-on asset class for decades. And the same thing is happening right now. So I'll say it clearly. Bitcoin at these levels is a buy, not financial advice, not a guarantee. But based on historical indicators, supply metrics, accumulation patterns, liquidity cycles, ETF flows, and structural macro environment, this is one of the strongest buying zones we have seen in years. This dip is not the end. This dip is the opportunity before the breakout. Make no mistake, retail will come back. The headlines will change. The sentiment will flip. And when Bitcoin begins its move towards six figures, everyone who doubted will suddenly become bullish again. But by then, the easy money will already be gone. The asymmetric opportunity will already be captured by the people who were willing to buy during fear, not during excitement. And here's something else I want to make extremely clear. When Bitcoin historically enters its acceleration phase, when price breaks through key resistance levels after a liquidation flush, the gains happen fast. Weeks, not months. That is why timing matters. Not trading, not leverage. Just understanding cycles, understanding where we are, understanding why these dips are buying opportunities, not exit points. So let me leave you with this. Bitcoin is still early in its cycle. The fundamentals have never been stronger. The structural demand has never been higher. The supply has never been tighter. And the macro environment has never been more supportive. Everything is aligning. Everything is pointing to the same outcome. Bitcoin at $250,000 is no longer the crazy prediction. It is becoming the logical outcome of this unprecedented convergence of supply, demand, and global liquidity forces. Buy the dip now, not out of FOMO, not out of hype, but out of understanding. Understanding that this is how wealth is built. Understanding that these moments of fear are the exact moments when fortunes begin. Understanding that long-term conviction is rewarded. The noise will fade. The volatility will settle. But the trend, the long-term exponential trend, will continue. And the people who stay focused through the chaos will look back and realize this dip was one of the greatest gifts the market ever offered them. Bitcoin is going to $250,000, and this dip is part of the path there. Stay focused, stay resilient, stay convicted. The real bull run is just beginning. And if you're still watching right now, if you're still locked in while the rest of the market is panicking, then you're already doing something 95% of investors don't do. You're thinking long-term. You're thinking structurally. You're thinking strategically. And that's exactly how wealth is built. Because what we're witnessing right now in Bitcoin is not a crash, it's not a collapse, and it's not the end of the cycle. What we're witnessing is one of the most powerful reaccumulation zones in the history of digital assets. And I want to take you deeper. I want to show you the analytics, the psychology, the liquidity dynamics, the behavioral economics, the historical analogs, the miner activity, the ETF flow patterns, the leverage structure, the volatility fractals, everything the mainstream media ignores, but that actually determines where Bitcoin is going next. Let's start with something almost no one is talking about. During this recent dip, while social media was having a meltdown, Bitcoin's dormant supply, the Bitcoin that has not moved for 3 to 5 years, remained completely untouched. Not a single wave of long-term holders broke. Not one. Do you realize how extraordinary that is? In previous cycles, dips of this magnitude always caused at least some degree of trimming from long-term holders. Not this time. This time, long-term holders held stronger than ever. Do you understand what that means? It means the strongest hands in the ecosystem, the people with the biggest conviction, the ones who hold through thick and thin, are refusing to sell. That alone tightens supply. But when you combine that with negative funding rates, minor capitulation, and ETF inflows, you get a setup that is so explosively bullish, it almost doesn't look real. And while retail is scared, the smart money is studying on-chain analytics. The smart money is buying. The smart money is preparing for a world where Bitcoin becomes not just a speculative asset, but a structural component of global finance. And if you think I'm exaggerating, listen to this. Several major banks have updated their internal models to allow Bitcoin allocations within their long-term portfolio frameworks. Not for trading, for allocation. That means Bitcoin is officially entering the same category as gold, bonds, and major equity indexes. Do you realize how massive that is? Once institutions are allowed to buy something, they will buy it. Not because they love Bitcoin, not because they believe in decentralization, but because they chase returns, they chase performance, they chase alpha. And Bitcoin has outperformed every asset class for the last decade. Let me hit you with a number that should make your jaw drop. If the top 100 global pension funds allocate just 1% of their portfolios to Bitcoin, just one single percent, that is over $1.3 trillion in potential inflows. And the Bitcoin market cap is still only around $1 trillion. Do you understand what that means? That means even a tiny allocation could double the entire market. And that's only pensions, wealth managers, endowments, insurance companies, family offices, corporate treasuries, sovereign funds. They're all coming. This cycle isn't driven by hype. It's driven by major capital flows. But the emotional side of this is just as important. Fear creates opportunity. Euphoria creates risk. And right now, the fear is palpable. The fear is thick. The fear is loud. And when fear reaches the level we just witnessed, you don't run. You prepare. You observe. You calculate. Because every single major Bitcoin rally in history began immediately following a fear event. Every major parabolic move began when the average investor thought the cycle was over. And that's exactly what's happening right now. You have people claiming Bitcoin is going to $30,000. You have people saying the ETFs failed. You have people saying the halving was priced in. All the classic, predictable fear narratives that appear right before the bull run accelerates. Let me repeat this slowly so it sinks in. Bitcoin is not in a downtrend. Bitcoin is in a compression phase. Compression is the coiled spring. Compression is where the energy builds. Compression is where the weak hands exit and the strong hands accumulate. Compression is where the supply dries up and the demand quietly grows. And when the compression ends, and it always ends, it does not end with a gentle rise. It ends with a breakout so violent that it erases months of sideways action in days. Now let's zoom out and talk about global liquidity. Because Bitcoin is not just a crypto asset, it is a liquidity sponge. It absorbs excess global liquidity more efficiently than any other asset in the world. And global liquidity is about to expand. When interest rates begin to fall, when central banks pivot, when fiscal spending increases, when capital becomes cheaper, risk assets explode. Tech stocks explode. Innovation stocks explode. AI stocks explode. And Bitcoin? Bitcoin goes parabolic. We saw this in 2013. We saw this in 2017. We saw this in 2020. And now, with liquidity set to rise and supply at record lows and institutional demand at record highs, this cycle will eclipse them all. Bitcoin is not just repeating history. It is evolving. It is maturing. It is transitioning into a macro asset class right in front of our eyes. Let me give you a perspective that very few people understand. If Bitcoin captures even 10% of gold's market cap, which is conservative given Bitcoin's portability, divisibility, and digital nature, that alone puts Bitcoin at $150,000. If Bitcoin captures 5% of global offshore wealth storage, ultra-high net worth individuals protecting money from inflation and currency debasement, that's another $80,000 of upside. If Bitcoin captures just a fraction of global remittance flows, payments rails, and reserve diversification, That's another $20,000 to $40,000 of upside. Add in ETF flows, institutional allocation, post-halving supply shocks, liquidity expansion, and inflation hedging, and the numbers start pointing not to $250,000, but potentially much higher. But let's stay conservative. Let's stay disciplined. Let's stay grounded. A $250,000 target in this cycle is not moonboy behavior. It is the structural midpoint of the most realistic models. Stock-to-flow variance, NVT ratios, dormancy flows, realized market cap models. Even conservative Fibonacci extensions. They all point to $250,000 as a base case. Not even the bull case, the base case. Now let's talk psychology. Because the psychology of markets is the psychology of survival. It's the psychology of evolution. And Bitcoin is the most psychological asset ever created. Right now, the market is experiencing something called post-liquidation anxiety. That's when people got burned in the dip and now they're scared to buy again, scared to re-enter, scared to believe. But that hesitation is exactly what creates the perfect environment for a massive upward move. A bull market feeds on disbelief. A bull market grows in the shadows of fear. A bull market accelerates when people least expect it. Sentiment indicators right now, fear and greed, volatility indexes, long-short ratios, social sentiment heat maps, are all flashing early cycle signals. And if you ignore those signals because you're emotional, you miss the opportunity that disciplined investors capitalize on. So let me say this loud and clear. Bitcoin is preparing for a breakout, not because of hype, not because of luck, but because of structural, measurable, undeniable factors that are aligning with rare precision. ETF accumulation, long-term holder dominance, negative funding resets, minor capitulation, supply exhaustion, liquidity expansion, institutional allocation, macro alignment, behavioral capitulation, whale accumulation, dormant supply stability, short-term holder reset, open interest cleansing, sovereign interest, growth. This is the checklist of a major breakout, and every single box is checked. You don't get setups like this often. You don't get cycles like this often. You don't get opportunities like this often. And when you do, the people who recognize them change their financial lives permanently. Bitcoin is not done. Bitcoin is not crashing. Bitcoin is not reversing. Bitcoin is reloading. And when it finishes reloading, the next move will be violent. The next move will be sudden. The next move will shock everyone who let fear corrupt their conviction. I'm telling you right now, Bitcoin to $250,000 is not a dream. It's not hype. It's not clickbait. It's the structural outcome of every major on-chain, macro, and behavioral indicator aligning at the same time. Stay focused. Stay rational. Stay ahead of the noise. The real breakout is coming, and when it comes, you will look back at this dip and realize it wasn't a warning. It was a gift. And look, if you've made it this far, if you're still here after the liquidations, the volatility, the panic selling, the fear, then you need to understand something very clearly. You are already ahead of the majority of investors. Because most people don't stay for the truth. They stay for comfort. They stay for confirmation. They want to hear what makes them feel good, not what prepares them for what's actually coming. And what's coming next for Bitcoin is not comfort. It's opportunity. It's asymmetry. It's the exact kind of setup that people look back on years later and say, I cannot believe I didn't load up when the signs were right in front of me. Because here's the reality. Nothing about this dip changes the long-term trajectory. If anything, it strengthens it. The forced unwinds, the leverage wipeouts, the short-term panic, they don't break bull markets. They build bull markets. They cleanse the weak hands, they reset the structure, they tighten the supply, and they amplify the upside. Every cycle has this moment. The moment where everyone becomes unsure. The moment where fear becomes louder than logic. The moment where the charts look scary, the tweets look bearish, and the headlines scream collapse. And every single time, that moment ends up being the moment right before the breakout. Let's talk about something almost no one is addressing. Bitcoin's realized price distribution. When you analyze the on-chain data, you see something absolutely wild. The volume of coins that moved at these lower price levels creates what we call structural support. And the more volume that moves at a level, the harder that level becomes to break down. During this dip, the on-chain realized distribution thickened massively between the mid-range levels. Translation: this dip created a stronger foundation, and when foundations strengthen, the upside becomes smoother, faster, and more aggressive. But here is the really crazy part. This entire drop did almost nothing to long-term holder conviction. In fact, long-term holders added slightly more Bitcoin during the dip. Think about that. While retail was panicking and selling into fear, long-term holders were accumulating. This is not the behavior of a market topping. This is the behavior of a market preparing for its next leg. When the strongest hands tighten their grip, when miners finish capitulating, when exchange reserves hit new lows, you don't get downtrends. You get setups for explosive upside. And I want to stress this again. Bitcoin's supply on exchanges is at a 7-year low. That means there's less Bitcoin available for trading today than there was in 2017 when Bitcoin was under $1,000. Less supply, more demand, more institutional presence, more adoption, more infrastructure, more legitimacy. And yet people are scared of a routine dip. That's the funniest part. The fear is not based on data, it's based on emotion. And emotion is the enemy of successful investing. Right now, we're watching the perfect combination of technical compression, on-chain accumulation, and macro alignment. We have declining inflation, improving liquidity projections, a likely rate cut cycle approaching, and a massive wave of AI-driven economic expansion that is pulling capital into innovation assets. Bitcoin thrives in environments exactly like this. Bitcoin's biggest moves in history always coincide with liquidity expansions. And what's coming over the next 12 to 24 months is a liquidity expansion unlike anything we've seen since the post-pandemic recovery. And while the mainstream media screams fear, here's what the data shows. Whales are accumulating, institutions are accumulating, sovereign funds are accumulating, ETFs are accumulating, long-term holders are accumulating. The only people selling? Short-term speculators, tourist capital, emotional traders, people who don't understand what they hold. And when tourists leave, the locals take over. The market becomes stronger, the volatility becomes healthier, the base becomes thicker. There's a metric called SOPR, Spent Output Profit Ratio. It measures whether coins are being sold at a profit or a loss. After this dip, SOPR reset to neutral, which is exactly what happens at the beginning of major expansions. When SOPR resets, it signals that the weak hands sold, the strong hands absorbed, and the market is ready for the next impulse. Historically, every time SOPR reset after a flush, Bitcoin went on a multi-month rally. Let's also talk about the psychological pattern repeating right now. If you put the 2024 to 2025 chart next to 2016 to 2017, they look nearly identical. A sharp rally, a sudden dip, consolidation, then a breakout that shocks everyone. The only difference? This time, Bitcoin is backed by institutional demand. This time, Bitcoin is backed by ETFs. This time, Bitcoin is backed by nations. This time, the liquidity conditions are stronger. This time, the supply shock is more extreme. This time, the upside is bigger. Retail investors always make the same mistake. They overestimate downside and underestimate upside. They see a dip and think it's the end. They see sideways movement and think it's over. Meanwhile, the people who actually study the data understand the truth. Dips create setups, consolidations build pressure, accumulation builds the foundation, and the breakout happens all at once, when sentiment is at its weakest. So let me tell you exactly where we are in the cycle. We're in disbelief, not euphoria, not complacency, not mania. Disbelief. And disbelief is the most bullish phase of all. Disbelief is where the biggest gains are made. Disbelief is where smart money positions itself while the average investor hesitates. Disbelief is the quiet before the storm. If Bitcoin were actually in danger, You would see long-term holders selling. You would see ETF outflows. You would see whales dumping. You would see exchange reserves rising. None of that is happening. Zero. In fact, the opposite is happening. Everything that should happen before a massive rally is happening right now. And I want you to think about something simple. Does Bitcoin behave like an asset preparing to collapse, or like an asset preparing to explode? Supply is low. Demand is high. Accumulation is strong. Holders are steady. Institutions are buying. Liquidity is improving. Exchanges are draining. Miners already capitulated. Leverage has been wiped out. This is not a bearish checklist. This is the most bullish checklist you can imagine. So when people say, Bitcoin is done, what they actually mean is, I'm scared. When people say, the top is in, what they mean is, I don't understand the data. When people say, the bull run is over, what they mean is, I sold too early, and now I need the market to go lower so I feel better about it. But the market doesn't care about emotions. The market follows liquidity. The market follows supply and demand. The market follows structure. And right now, that structure is telling a very clear story. Bitcoin is setting up for its next major rally. Will it be smooth? No. Will it be volatile? Yes. Will it scare people? Absolutely. That's the nature of Bitcoin. That's the nature of every asymmetric asset. And that's why the returns are so massive, because most people can't handle the volatility required to earn them. But if you're here, if you understand the cycle, if you understand the metrics, then you already know $250,000 is not crazy. $250,000 is not a meme. $250,000 is the logical outcome. The math supports it. The flows support it. The supply supports it. The macro supports it. And history supports it. So yes, I'm telling you again, buy the dip, not with emotion, not with panic, but with understanding. Because the people who load up during fear are the people who celebrate during euphoria. And that euphoria phase is coming. Not today, not tomorrow, but soon. And when it hits, it will hit fast. Stay calm, stay focused, stay disciplined. Bitcoin is not done. Bitcoin is not slowing down. Bitcoin is not reversing. Bitcoin is coiling. And when it uncoils, the move to $250,000 will look obvious in hindsight.